A frenzy of activity this week pushed one Hong Kong fintech stock to briefly become one of the 10 most valuable companies in the world. Joining us now, J.J. Kinahan, CEO of IG North America. I always point out that having a few shares change hands at a certain level and then multiplying the outstanding shares by that level and pretending this company was ever worth that market cap, it's not. It gets out of hand where a few things change hands, but the market cap was never more than Coca-Cola. But it is representative of the speculation and the fervor that was happening that day, JJ. Are we back in that regard to see a little of that? I'm not saying I missed it, but when there's no retail traders around, it gets a little dull.
It does get a little dull. I think, Joe, you hit on a lot of important points there. If there's anything we've learned, hopefully, over the last couple of years, it's don't get caught up in the frenzy. I know that people tend to. And it's actually okay in this realm. And that is, if you're going into something, let's face it, this was a lottery ticket. I kind of joked that this week at work that, you know what, there were two lottery tickets this week. The one that was here in my home state of Illinois for, what was that, close to $1 billion. And then this stock. And so if you're playing it like you're playing a lottery ticket, that's fine, where you don't expect to make money, but you know that going in. If you're playing this and saying you're investing by playing in these stocks, well, that's just a terrible premise overall. So I think what people really have to do is to keep it in the right perspective if they're going to go in and play these. Is it fun? Maybe? Yes. Is it really healthy? Probably not overall. But again, I just think that people need to realize when they're going in, you're taking a little bit of a gamble. And I think that, sometimes people have this mindset where they're like, well, whatever I do, if it's in the market, it must be investing. This is not actually investing. This is taking a shot. There's a big difference in your mental approach and hopefully a big difference in the amount of money you're going to allocate to something like this.
Coincident with the decline in the markets in the first half of the year, we did see a lot of this dry up. Do you think it's coming back? Do we want to get back to the meme stock NFT frenzy, for lack of a better word, that we saw a year and a half ago? That's not good for the markets either. So we want somewhere, I guess, a comfortable middle between the two extremes.
You know what I really want, Joe, is I want people to have interest in the market overall. Again, going back to if we have meme stock type activity and as people allocating capital the right way, not the worst thing in the world. What I really want to see and what we did see, over the last couple of years is people taking an interest. And you and I have talked about this before, many of them for the very first time in their investments overall. That's healthy. That's good, particularly younger people. If this is the type of activity that has to bring younger people to the market so that hopefully they continue to participate in their 401ks, then I guess, that does, ends justifies the means, maybe you might want to say. But things like this to get people interested, I'm 100% behind it if it brings people's interest to the market, but it does so in a realistic point of view. We'd all love to see these types of returns that we were invested in, but let's face it, it just doesn't happen. And again, people need to get educated of how the market actually works so that you can make some wealth over the long term, as well as occasionally have these types of activities happen within the market overall. I think the good thing is when these things do happen, we start to get a little bit more participation.